This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your livestock roundup. And we've seen kind of a choppy trade over the past couple of sessions after surging higher in both live cattle and feeder cattle. A lot of the chop here as of late, probably the cash market, are people waiting on the cash market to evolve a little bit more. We know that there's still optimism, thinking that cash could uptick yet again. If that plays out, we wouldn't be surprised to see these August futures continue higher and maybe press up against that 109.5 to 110 resistance pocket. From there, I think they're going to probably have a little bit of a hard time in the very near term to get out above there. So we would be looking to reduce long exposure against there. Now, as far as the support side goes, previous resistance now becomes support. We see that coming in at 106. Feeder cattle wise, because of our optimism on the corn market, we think that it might be a little bit more of a headwind and upside might be limited, even though we've really rallied and stabilized technically over the past several weeks. 145 to 147 is that resistance pocket that we're keeping a close eye on, so possibly a little bit more juice left in that grape. But against that pocket, not sure there's a good risk reward trade right there. Now, as far as the support side goes, as with the live cattle, previous resistance now becomes support. We see that coming in close to 140, 141 for that August contract. Wrapping things up with the lean hog market. Lean hogs started the week with a bang. We've seen the Chinese prices soar, but really giving back some of those gains here as of late. Started with yesterday's close, and we saw that feed into weakness again in today's session. I'm still optimistic from the fundamental standpoint, thinking that we could see exports pick up to China. But with that said, the technicals still remain very weak, so we want to continue to see this bottoming process take place. And to do that, we need to hold technical support. 79 for that August contract is going to be the big line in the sand to hold. If we can continue to hold that through the next week or so, I wouldn't be surprised to see more buyers step back into the market. Overhead resistance really doesn't come in until about 84.80 to 85. So that's what we're looking at ahead of the weekend. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.